Welcome to the Mortgage Talk Show. I'm your host, Steve Conklin, sitting here with Jake Giraffe. Hi, Jake.
I'm doing good. How are you doing, Steve?
I'm doing good. Again, we're from Satori Mortgage. I always forget that. So, as always, we start off with the mortgage buzz. What do we got?
All right. Fed no longer needed to boost economy, and this is from CNBC.
Okay, so what we're starting to see now, which is kind of weird, this is what it used to be a long, long time ago, is that now people are worried about so many rate hikes and how it's going to start to affect the economy. Basically, I have in here for notes, Trump and a couple other people, they run, keep, the Fed's keeping rates artificially low. They were buying mortgage-backed securities. They were doing a lot of unique things, to try to stimulate borrowing in an economy and stuff. And, a lot of the, especially the, not necessarily the chairman, but a lot of the other people that sit on the Fed board are kind of basically like, well, now it's time to stop, go back to, the free economy, kind of let, natural rate hikes happen and stuff.
At what was zero, they had to come up, but now they're kind of more in a place of we've brought them up enough. Maybe it's time to leave it alone a little bit more.
Yeah, that's what people. You have both sides. You have some people saying, now's the time to keep hiking it up, and then you have other people saying that now's the time to, let's kind of let's see how the market kind of shakes out. It'll be really interesting. It's kind of I kind of picked this article up because we haven't really had this debate in the economy or even in the news for 10 years.
Yep.
So I mean, it's kind of crazy now that they're going back to where they're talking about in here the benchmark at 2.7 and 3%. I mean, that's a long ways from zero. So that means that it's getting better. And I think with anything, I think rates will continue to rise.
Yes, as long as the economy stays strong, there's definitely a chance that they'll continue to rise a little bit. Absolutely.
Yep. So if you need to borrow money, now's the time to borrow money.
Yep, because it could get higher. Yep, exactly.
But the good thing once the rates get higher, your savings yield more, and there's a lot of other things that come with benefits of a higher rate. So it's definitely not the end of the world.
Yep, your savings can actually accumulate to something a little bit now.
Not 0.001% on your Premier checking account.
Yep. All right, our next one here is from CNBC as well. Higher mortgage rates, rising prices costing home borrowers more than $1,200 a year.
Yeah, I thought this was kind of cool. A lot of people ask kind of what's mortgage rates do? How does it affect it when it goes up? We don't necessarily see business. Yeah, I guess we see different types of business when rates fluctuate, but our obviously there's always people buying houses. But I think this kind of has some good factoids in it here. The buyer with $2,500 monthly housing budget lost nearly $30,000 in purchase power. And that's with the rates, about 5% on average, which I don't know. It's a little high, but 5%. I mean, it's definitely definitely normal.
Yeah.
But yeah, I think that's kind of crazy, right? 30,000.
Yeah, and it puts into numbers a little. The 4% to 5% is kind of a little bit arbitrary. Like, what does that mean exactly? And this puts into actual numbers of what that can mean in terms of your purchasing power. And with the purchasing power, that can be in terms of, maxing out your debt to income ratio or a bunch of different factors.
Yeah, this is another one in here is the home buyers by about 15% of their purchasing power overall. So that's quite a bit. I mean, especially, because you're dealing with obviously bigger numbers and, most of them are
raising
over
values. Raising values plus the lowering purchasing power can really, makes it so you're looking at a different type of home than you maybe imagined a year or two ago.
And I think this is going to kind of lead into more of the stabilization of home values too. I think the next few years it's probably going to be a little bit more flatter than it has been because, like we said, like not only are people losing purchasing power, but rates are going up. So I mean, it's probably going to not be as strong as the seller's market. Again, markets depend on where you are, and there's no right answer for that. But I definitely feel like I mean, I'm seeing people that bought homes 3 years ago are getting about $100,000 in equity in certain places in the metro of Minneapolis. So, I mean, I would imagine that at some point that's going to level off here in the next few years. But
makes sense. Yep. And then previous show we were talking that a lot of economists are thinking 2020 is when it's really going to swing back, but we'll see what happens in the meantime.
yeah, as long as it's not a recession.
Yes. Yeah, we could go without that. That's for sure. All right. Next article here is Bank of America bringing loans back to lower income and poor credit people.
Yeah, so they kind of talk about subprime mortgages and stuff in this article, and this kind of goes into other things that we've touched on the show about
the non-QM.
Yeah, it's not only not it's non-QM, but this is they're kind of running these cool little pilot programs with they're basically to serve low to moderate income people, and this is where they are trying to do the affordable housing. And when the subprime hit and the housing crash happened, I mean, there was just a lot of it was due to inflating income, the famous no income,
no job,
no assets, no
Ninja.
nothing. Yeah, those loans. There's so many different types of so-called subprime loans that weren't actually meant for the people that used them. And where Bank of America is kind of doing these pilot programs, which is kind of interesting, is they're going more off of it's called in the article a character-based lending versus a credit score. And this is reminds me of the old school the small town banker. I used to do some rural loans, and it always remind me of people, they just want to drive into their bank and sit down, give the handshake.
The handshake, yep, the handshake loan. Yep.
And, I think definitely in a housing market and in lending industry, I think there's definitely some really good possibilities that comes with this, especially if you have something like a Bank of America that, can afford to do something like this. And, they one of the things they said in there is if, somebody has pretty good credit, decent job history, but they just have tons of medical collections for whatever reason, they don't count the medical collections.
Okay.
Which, they don't do that on standard FHA, but I think that, I think especially for, certain people don't always have the same, a lot of people have different events in their lives or whatever that, may cause them to have certain events. And I think it's kind of a cool way to give back a little bit.
Yep.
And one of the things in here that they said that I thought was very interesting is they say that, let's say somebody's paying $1,000 a month for rent and they want a mortgage payment that's $1,400. Bank of America says that, okay, for six months, you have to save $400 to demonstrate that you can pay a $1,400 payment. That's a very cool, creative way that again, it's like that character-based lending that I think there's a lot of room for that.
Yep. And I think it just shows the direction of the mortgage industry in general is, first we saw, some private money come in for the non-QM and stuff like that, but it's, we got to go outside of the box a little bit now because we need more people into homes, but we don't want to go back to the pure subprime that we had before where we were making funny loans.
Exactly. And we've talked about on here too about how, housing legislators and stuff like Elizabeth Warren and these other people, they want to, try to pass laws to, to really help the fixed income and the lower income people and stuff. And I think this is a good way of kind of like a happy medium. It's not necessarily passing a law that says you have to do this or you're earmarked to a certain amount of money. It's really just, a big bank group, going with a local housing initiative and getting a creative solution. And it seems like it's those are the people that deserve to have it.
Absolutely.
Like when you kind of have, sometimes when you have those bigger, legislations and other things, there's people come in there and, just like the subprime before, like there's a lot of predatory, characters and stuff, and it's not always meant for, it's a good idea, but it doesn't always go to the people that, would deserve it.
Yep. And it's about, and one of the things that's changed since then too is all of the licensing and stuff like that. It's got a lot of the bad actors and people that are trying to take advantage of people out of the industry.
Yeah. It basically hit a big, It's like a toilet flushed. I think they said like 70% of people or something got laid off or left the industry from 2006. So, all right. Well, I hear the music. So we'll be back after the break. Take your questions.